So, good evening, everyone watching us in India, and greetings of the day for everyone who are the delegates watching us across the globe. I'm Latika, Associate Vice President at IMEI. It gives me immense pleasure to let you know some of the data crunching which we have done from yesterday to today. We have around 45 international speakers. We have around 30% women speakers and around 30% international delegates who are viewing us live at this point for the first virtual Global FinTech Fest, organized by FinTech Convergence Council of IMEI and NPCI. This conference is presented by Department of Economic Affairs, Ministry of Finance, and Reserve Bank of India, and powered by Amazon Pay and brought to you by WhatsApp and Google Pay. For our next session, here with us are our amazing guest, Mr. Rajan Anandan, Managing Director, Sequoia Capital. If I could describe him in one sentence, from helping the world to Google around, and now he helps fund the startups who hope to be the next Google, I would say the man with the Midas touch. Welcome, Rajan, sir. And along with him, we have Anandan Vijay Shekhar Sharma, founder and CEO of Paytm. And I would say that he is the one who's equivalent of the man who saw tomorrow. And with these two great digital mavericks, it can only be a great rapid fireside chat on what's next in India FinTech. So delegates, please keep your questions pouring in, and I'll make sure that they reach out to both of them. Over to you, Rajan, sir. Thank you.
Great. Thank you so much. Hi, everyone. It's great to have all of you join us for India's very first global FinTech festival. We are in day two. It's a two-day online event, as all of you know, and greatly appreciate all of you taking the time to join us. Obviously, FinTech in India is all of 4 or 5 years probably into the making. And in fact, I'm delighted to have with us, in many ways, I think a decade from now, we'll look back and say the entrepreneur who really kicked it all off in India with Paytm. So Vijay Shekhar Sharma has joined us today. We just got a very brief introduction of Vijay, but I know there are quite a number of you that are dialing in from outside of India. If you're in India, you already know who Vijay Shekhar Sharma is, and you're already a Paytm customer. But if you're not in India, you may not have heard of Vijay. So I'll just take a minute to introduce Vijay. Vijay is an extraordinary entrepreneur. He actually started his first company in 1997 while he was still in college, sold that company, and then in the year 2000, started a company called 197 Communications. That has had really over the last 2 decades has been many different companies, and Vijay obviously in different forums has talked about that. But is now really Paytm, and Paytm is again many different businesses. In fact, my first question to Vijay is going to be, what exactly is Paytm today? But Paytm kicked off India's digital fintech revolution by launching what was and continues to be the leading digital payments product. But it's much more than that. Paytm today is a payments bank. It's in many commerce businesses. Vijay recently acquired an insurance company, and quite frankly, that was only yesterday. So in the last 24 hours, I'm sure he's done lots of other new things that none of us have heard of, and maybe he'll actually talk about some of those today. So Vijay is a phenomenal entrepreneur, a business builder, and also has been a terrific proponent of India's startup ecosystem. So Vijay, thank you for joining us. It's a true pleasure to have you. So as a way of getting started, Vijay, why don't you, since we probably have about a third of the many thousand attendees at the Global FinTech Festival who are not from India. But even for those in India, I don't think anybody other than you and your management team know all the businesses that you're in. So, take a minute or two, Vijay, to tell us about, what is Paytm today, and what's the vision, and where are you trying to go with it? But let's start with what all businesses are you in today?
Wow, thank you. This was such an elaborate welcome or introduction that I cannot believe that I am this person. As Rajan, you know it. I'm a big fan, huge fan. Like Latika said, you do not just have a Midas touch. You actually are the biggest torchbearer and a cheerleader for all of us young startups in this country. So thank you for being there, Rajan. And it is a privilege to be together on this panel with you. And I think I'm a story of attempting to make money in India, because every business in India, thanks to the size of per capita income or GDP, which is not very large, we actually have much less revenue. So I can say that while there is a story that I'll weave in around what we do, but the real truth behind the scene, the motivation behind the scene is that where are the revenue and profit pools, and can we build a technology-led, digital distribution-led businesses there? So we started with payments business, and payments wise, we started with wallet, then we got into UPI, then we got into card, POS machines, and whatnot. So payment business is a full stack payment business, if you will. It includes even payout businesses, for example, like companies looking to pay their customers, employees, and so on. So this is a payment stack. Payment is the largest revenue for us, actually. I mean, a couple of $100 million of revenue comes standalone from payments for us. And then we had a lot of traffic, so we started to build different commerce stacks. So we are number two in travel, movies, events, these kind of categories, which are ticketing, if you will, or bookings, if you will. And then we also have a commerce business, which is an e-commerce business, where we are distant number three. So I would say that commerce is one other factor. The good thing for us is that commerce makes money because we have nil CAC. So surprisingly, even if for some other it could be a bleeding revenue, for us bleeding money, it just makes money for us. So payment gave birth to commerce. And logically, if you look at us as Paytm, we would be a payment and financial services company. So finally, we started to build our financial services stack. I don't consider a bank as a separate financial services stack. I treat that as a part of payment. So if I keep the bank separate as a part of the payment itself, because the wallet, the UPI, everything is issued by bank, so it is actually a bank's business. Financial services are that we, like you said, we are doing insurance, and we hope to do lending. We are doing good in mutual fund and hope to do stock brokerage very soon. So one of the things that you can expect us to launch within the next 2-3 weeks is stock brokerage. So that's our wealth product. So payment company attempting to become a financial services company, and in between we have an internet business, consumer internet business.
Terrific. Thank you for that. Well, you heard it first at GFF. Paytm is getting into the stockbroking business. There you go. So thank you, Vijay, for sharing that with us. Let's start with digital payments, right? I think especially with UPI and MDRs sort of going to close to zero, I think the prevailing thinking is that there is no money in payments. But you just told us that Paytm generates several $100 million from digital payments, right? So tell us more about what's the real deal with payments? Maybe I want to focus on where is the money in payments, but also, I mean, you're saying there's a lot of money in payments, but also how many users are there really? India has about 500 million active internet users. How many of them are truly active on digital payments today? What are they using it for? So just double click for us a little bit on digital payments.
So India today have 500 million users who would have internet access. Paytm has somewhere around 350 million who would have signed up and transacted at least once for us on a payment platform, whether through wallet or through UPI or through card. We basically are a combination of payment options, so we don't restrict customers for one or the two. So that being the number, India probably, I mean, we have about 17 million merchants. So, I mean, overlap, give or take, I believe that there would be 20 million merchants out there, or 17 million is a total universe. We must be overlapped with others. So don't know the number merchant base. And this includes the POS, EDC, and then QRs all combined. Now, the number of transactions that we're talking about that happen between consumer and merchant is the business that Paytm is in. While there is a huge amount of business which is person-to-person money transfer, and we universally know this, that we have championed that business as that we are not going to spend money on that, while that is a big business for many other UPI players. And when it comes to the merchant payment, Paytm takes majority market share, which means that we are still today larger than everybody else combined when customers are choosing to pay to a merchant. This merchant can be an online merchant like Zomato, Swiggy, Ola, or this merchant could be an offline merchant like a big bazaar or a corner shop of any other thing that you would have seen. So these payments are the merchant payments. Considering that we include 3 funding sources, all 3 is the reason that we are able to aggregate and see larger number of transactions on Paytm app or led by Paytm tokens. When it comes to making money, Rajan,
before we go to making money, Vijay, so the I in preparation for today's discussion, right, I talked to a couple of industry leaders, and it's the consensus view is if you look at sort of truly monthly active unique Indians who use digital payments, right, whether they be wallets, whether they be UPI, or what you're talking about. It's about 150 million. Does that number seem low? Does it seem about right? Ever used is probably 200-300 million, as you said. Even if you have 350 million, ever
I,
used is much higher. But what do you think the real number is?
I, so it's very interesting, Rajan, and I want to share one number. I have a comment on this number because I get to hear a number like this, and I'm always a little bit not sure of this number because this number is significantly led by a single number that is publicly published beyond RBI published. RBI publishes all numbers: the card numbers, the wallet numbers, and UPI numbers. The UPI numbers are published separately every month. And then, if you were to look at wholesale payments, where NEFT, RTGS also comes, RBI publishes those numbers. So if you look at the UPI numbers, I'm told that UPI has about 120, 130 million users. And then that is the total number of users UPI has. And then I'm told that UPI has 100 million monthly active users or a billion transactions. So I'm always confused. How can a platform which has 130 million ever signed up user can have a such large monthly active, like 130 million? I mean, like, I'm not sure how does it happen, and is it like really monthly active? If it is so, then it is amazing because no platform in the world who has signed up customers can have a monthly active transacting customers at that ratio. But I think because every one of us is propagating that as a rail, so that works out. If you look at the number of unique card customers or unique wallet customers, and those customers would have a little bit of overlap and a little bit of non-overlap, I would add whatever the UPI is. Now you have a choice to add the number, either the active number or the total signed up number. And then if
So
you
let's take the 100 million active number for UPI. You said it's 100 million, right? RBI said it's 100 million.
No, this is RBI doesn't say number of users actually. I mean, every day, what we get to every month, what we get to see is the total number of transactions and total transaction volume out there.
Got it.
You get the user volume. So user number still remains separate. What I can say is that we've seen in Paytm that there are monthly upward of 40, 50 million who are using card or wallet standalone products. So if you top up for that, so overlap of that and so on and so forth will be the number that I would say that will be in this country. Should the number be 100 million? Maybe the number has crossed 100 million. That is truth.
So, but let's say it's 100 million plus another, call it 50, 60 million from cards and wallets and things like that. So about the 150, 170 million number is probably, it sounds like that could be what the number is, right? But that is still only a third of, because we do know that, this is from my old job. There are 500 million active. It used to be 400, a little over a year ago. So there are 500 million monthly active, and actually that daily active number, by the way, is getting close to 450 now, right? So actually, India has one of the highest daily to monthly internet users in the world because we have such low data costs, right? But that doesn't necessarily translate to payments. But tell me why, despite UPI, despite all the focus that has been put on payments, despite having gone through demonetization and now COVID, 4 months of lockdown, why are only a third of India's internet users using digital payments, whether it's UPI, wallets, cards, etc., put together today? What is the constraint today?
Two big factors, Rajan. One is the use case. So there should be something that I'm able to do which is better using digital payment over other payment options. And second would be my comfort, trust, or assurance that I may, if you will. You know that in India, debit cards are billion debit cards, and the active number of debit cards are 1/10 of that actually. And the reason that is that people did not trust that debit card could be used as a payment option, and there was a distribution of cost that was restrictive. So in this case, I believe that we've started reaching tier 3 and tier 4, and obviously there is a lot of traffic that comes from that. It is just the use cases and the number of places that we will increase, and events like COVID, where people are sensitive about that you should pay using digital. But it is not so much out there when you go to tier 2, tier 3. There people are still comfortable paying the cash. What we're seeing is typical merchant, average a merchant that is getting in a month, and I'm counting the average active merchant on Paytm, is somewhere around 5 to 7 transactions a month. And that is the number that we are counting. So that also means that there will be merchants who are counting 20, 25, and then there will be merchants who will take one payment. So really speaking, the payment still has huge number of resistance from consumer side, driven by, like I said, trust, confidence, and use cases. These are the only factors that will drive. And then we all have attempted huge amount of cashbacks. I mean, there is a P2P cashback.
You attempted cashbacks.
I put a logo of cashback.
You are the inventor of India's cashback.
I put airport hoardings with a cashback logo. I mean, by the way, there's a little bit of nice anecdotal story behind cashback versus this. So we have attempted cashbacks incentives to the customers. Customers are not at that avalanche level coming in, so it is more led by those. Cashback logo. Now, a little bit even of that. So we were building payments, and we had to incentivize consumers to drive using a new payment option over the traditional ones and mobile phone led. So we found out that typical credit card companies and debit card companies created point led system. And my only trouble was that I used to see hoarding called 4x reward points when you buy an iPhone. And I used to be like, how much I get? First of all, I do not even know how much am I getting. So 4x means what? And then there was something, I remember I think there was a large platinum card ad that 10,000 reward points for buying an iPhone. Again, I'm quoting iPhone because I remember these ads in those days when iPhone launched in India and there was a euphoria of it. Again, the problem was I do not know what 10,000 points meant. So that is exactly the reason I said that we will not put a cognitive load on the customer. We'll at least give him money that he can see in the bank account or a wallet account. So that is why we said everything will inevitably become cashback. And today, even the credit cards are only cashback credit cards. They're not reward point credit cards. When you look at incremental acquisition of credit cards, and I mean,
very interesting. I didn't realize that you got the inspiration for cashbacks actually by looking at reward points. You're absolutely right. I have no idea what all my reward points from Amex or Citibank or any of these things mean, right? Because I have to go find some book somewhere or some website where
and then they expire. We feel, and Indians are price conscious, value conscious people. So I feel that you gave me something and you took away. I'm not sure why did you give me. So I mean, all those Western concepts.
So why did you take it away? Why did you take cashbacks away, Vijay? I mean, obviously it's very expensive, but it was helpful for driving user acquisition. But why did you take it away? Because today you don't have cashbacks, right? Or you do? Hello, Vijay, are you there?
Vijay sir, how?
Hi, can you hear me? Hi, can you hear me? Okay. I can't see you, Vijay. I don't know whether everybody else can see you.
No, we can't see him.
Hi, you're back.
Cellular data, if you are seeing me. Can you hear me? Can you hear me?
Yeah, now
if
we
you
can
are
see you.
hearing me,
Now we can see you.
data.
Oh, no, now we can't see you. We can't, yeah, we can't see you. But Vijay, why don't you speak and then maybe it'll come back on. Can you speak so we can hear whether we can see whether we can hear you? All right, everyone, please do be patient. I hope you can hear me because my network is also not that great. But Vijay will be with us in a moment. I think the telecom networks are also shocked that Paytm stopped doing cashback, so which is why the networks have just collapsed. Vijay, Vijay can't hear this, but
So we are in touch with him. I think he's just trying to be back on the network. The delegates, please be patient. And like Rajan sir said, just give us a few minutes. We'll surely get him back.
that's right. You know, the good thing about doing an online conference is you can dial in right from your home and you don't actually have to go to a venue. But, you know, sometimes these sort of connectivity things happen. Vijay, you're back.
Thanks to the internet connection, power connection, power outage. I live in national capital of the city, which has a power fluctuation. So they were gone, out, come back. So 2-time modem off. Sorry. Yeah. Thank you, everyone.
No, we thought the telecom network got really worried that you stopped the cashbacks and they just reacted violently. You know, Paytm. So I have this question. So let's stay with cashbacks and then we'll move on to the next topic. But why did you stop the cashbacks, Vijay? What?
So in the monetization journey, we figured out that it is nearly easy thing to acquire the customers by handing over the cashback and nearly easy to win the customer back by handing over the cashback. I mean, nearly easy stands for there must be an extraordinary reason that other party starts to do, for example, like spend more cashback or anything. That is why the customer won't come back. But literally, I mean, this country has value conscious users. So we wanted to figure out in this last 6 month period, if you will, where we were trying to figure out who are the customers who are loyal on a platform for its service, not necessarily just for the cashback reason. And voila, I want to surprise you here. I actually grew the customer base without giving a cashback and active and DAU, MAU over the previous age. So
it's amazing. That's amazing.
So
but why, how did you grow it without giving cashbacks? Because you basically, what did you do instead? I mean, cashbacks was your acquisition strategy, right?
No, I think it was just about service. I mean, the reason that we are going in this curve is, I've said this very often, that there are 3-3-3 curves. First 3 months, 3 years of a business are when you build your product market fit. The next 3 years are your monetizations year. So if you notice, we now are in the monetization years going on.
That's right.
So I'm very comfortable saying that we actually make more money than last year and 3 times more money than last year. We spend 1/3 the money than last year the same month, and we are happy seeing the customer growth. So idea here is that we wanted to see whether there is an actual customer sticking around on our platform or not. And lucky, or I would say that I actually asked the team to take it lesser, and then I said 0. I really want 0, like nil. And that is what is. So I think the use case, we changed a lot of things on the app also, the ease of user and every other thing. So I think use cases are the reason that people come on the app.
Got it. Sure. So just one last thing on payments. You started talking about this. So, the prevailing thinking is that there is no money in payments, right? Or digital payments because of primarily UPI. So how are you generating? I mean, shouldn't share. How are you generating hundreds of millions of dollars on payments?
I think this is a misnomer that payment does not have money. The payment value chain has money. Who's keeping that money is a separate question. For example, like UPI doesn't have money for a app provider or an app provider, but NPCI still makes money from UPI because the switching cost exists inside the system. And similarly, the bank. So remember, we are a bank. We're not a payments SP provider on top of some of the banks. So everything is in a bank. So bank has from float revenues to the transaction revenues to the switching revenues, everything. So this is being bank that gets revenue, not the PSP independent thing that gets revenue.
Okay. So you're saying payments. So your payments bank makes the revenue, is it?
Yeah. I mean, the answer is that in payments, the revenue is in a value chain. The value chain, your players whom you're talking to are playing, does not have revenue. There is no secret about it.
Okay. So
every P2P number that gets published, I feel another level happy that, okay, you getting rewarded. I feel happy about it because this should be a reward, no money.
That is great. And so let's now move to digital lending, right? So I want to get your thoughts on all the different aspects of, because you're playing in almost every segment of fintech now. So what's the real deal with? Have you started lending already, Vijay?
We started with lending as an ambition, but not as a journey yet. In that, we started with deposits, wealth, gold. These are all that you bring the money on our platform. So we have large deposits, typically because of a Paytm bank limiting 1 lakh rupees, so a limitation in the bank account. So we have a partner bank with whom we have fixed deposit. And then we have mutual fund business where you bring and buy mutual funds, and you can, now we're going to launch brokerage where you will bring and keep some margin money and float money and so on and so forth. So I think our approach to lending has been that first bring the money on our platform, and then leveraging that knowledge can help you get loan. So different entities will over the period do the lending. For example, like bank will work with some lender because Paytm bank is not allowed to lend. So bank will work with, and is actually right now working with a couple of NBFCs and other people who give you overdraft or some other payment facility, some loan that you can use in payment transactions, because personal loans of a small amount are also possibly there. So the bank will work independently for lending, and the mutual fund distribution team will work independently for lending. Gold team will work independently for lending. So our lending is not led by that there is a single lending KPI and then you do it. Our lending is that all these deposit is incoming businesses, can we leverage those?
Got it. Okay, so on this, that's interesting. I hadn't thought about the deposit side of your business, right? So give us share some consumer insights of what you're seeing on deposits, like gold and some of these other things that you're doing. What are some interesting consumer insights for the audience so that they get a feel for the Indian consumer?
Yeah. So there are stages. First is the bottom of the pyramid, which is called saving account, and then you on top of it can give a term deposit, which is a fixed deposit account, and then you get on top of it gold account. Then we get on top of it mutual fund, and over the period, hopefully, we partner with some AMCs to launch index fund and whatnot. So these kind of things are the maturity curve of different things. What I'm learning is that people are very comfortable and very happy opening completely digital bank accounts. So Paytm Bank now sits with more than 55 million, and out of this, more than 40 million are active accounts, like a not like a annual active. I'm talking about monthly and a quarterly active. That level.
Why do they do that, Vijay?
Yeah.
What is the value proposition for a user to open a Paytm account, bank account?
The biggest reason has been that we've been the completely digital in terms of giving you money transfer for free. For example, like money on typically a bank right now is restricting different level on UPI or NEFT or RTGS. If you notice, if you are a bank customer, after a certain number of UPI transactions, you are paying per transaction. If you are a B bank customer, the bank is limiting in third-party apps a particular amount. And if you are a C bank customer, the total money that is available for money transfer is also capped. So things are like banks have restricted different money transfer use cases in a complete digital way because they want to see some revenue coming from this. And we said that all your money in digital transactions is free. When you use paper, that is check or draft, that is the time when we charge you. So we've done
interesting.
Yeah, we
said all digital transactions are free. Wire transfer, everything is free.
And literally like not like with a limit, but like a completely free, like the free. Remember the AT&T iPhone connection, unlimited internet data? This is that kind of thing, that you have a bottomless, unlimited free internet, this thing. And secondly, our bank account is also a bank account that is extremely digitally integrated in workflow of a life. For example, like if you have a bank account, you need to use a bank's app. And I think one of the largest lenders in this country, I would say top three now, top four, so that we don't guess which one it is. I'm a customer of two of them. And I can say that one bank works with me because there is literally a gentleman who's ready available on a call, which is obviously that they believe that I'm a key customer. But if I use their app, I feel uncomfortable about because it does not even have an available. I wanted to get an NFC enabled debit card. I could not order on this large bank's app. And wow. Then and I was in COVID days, I was like, can I get some debit card? I walked into the bank branch of them, thanks to they had this nearby. And the gentleman has taken an order. I can assure you, this is 23rd July. I was in the first week of July. So it has not reached. Now, the point is that while I'm a key customer, the banking services where the money is not made are not meant to be serving the customer in a scalable manner. While Paytm Bank, because there is no money being made in lending in that business, everything we've taken to the heel. I'll give you another example. Another bank that I use, and then I could not log in their bank app. I just could not log in their bank app because they expire my login after a certain time. They do some things with something that they restrict. For example, like I had a friend who wanted me to donate 6 lakh rupees to a school here in Delhi, and they just did not let me do this transaction. I had to go into the bank to send 6 lakh rupees to a school. Now, believe me, this is literally top 4, maybe the topmost quadrant bank in this country, which did not let me do this because they wanted me to be safe and secure. I understand, appreciate, admire their intention, but it was restrictive of the money. So if you are an active bank customer, you'll find Paytm Bank is far ahead of all these people when it comes to the experience, is the reason that people are opening bank account, I would say. And I think these neobanks concepts that you're seeing, SMEs and consumer neobank or a kid neobank or a teenage neobank, the reason that they are attempting and the banks are very happy to give their APIs to them is because the overall experience is something which is not there. At the same point in time, I feel uncomfortable because you are sitting on a platform which itself is not meant to do this. So let's see what happens there.
So what do you think, actually? So that's a great point. I'm sure there are at least 50 founders attending this conference that are trying to build neobanks. I mean, every day somebody wants to launch a new neobank. So what's your take on these neobanks, Vijay? Like, what would it take for it to be a successful neobank? I mean, obviously there are going to be a few that will make it, right? As with everything else. But what will differentiate the entrepreneurs who successfully build a neobank from maybe the ones that won't?
So a vertical use case that is scalable, meaning it has addressability of tens of million customers, and the experience is so superlative that even though you have a bank in the base bank that is involved, but you prefer this interface. That is the neobank that's going to work.
Got it.
So,
You need to be pretty focused.
Yeah, that's right. For example, like we started with recharge and bill payment, and even though there was no money in recharge and bill payment, but the experience got customers here, and then over the period you build line items. So I also believe fundamentally, neobank's theory is that even if there is no revenue directly in a neobank, or I mean, it will have absolutely minuscule revenue. I get you are effectively a DSA and a little bit of float revenue if the bank is ready to give you, but you get much less money than the cost that you're going to pay. So this will neobank standalone will definitely not make a revenue model. And as they say in fintech, every revenue model lends into the door of lending. So on that day, I do not know how the neobank versus the base bank will feel uncomfortable with each other, or maybe they will give referral fee. So parting away from the challenge of what future revenue model will be, I think the incredible, impeccable use cases that they can address, which is sizable, scalable, and impeccable, that other people are not able to address, will be the case.
Got it. Cool. Let's shift gears to insurance. So, like, how come you bought an insurance company?
So I think, like I told you, Rajan, I think it is all about chasing revenue pool and profit pools. And I think insurance.
What is the profit pool in insurance industry in India? What's the total profit pool?
Extremely minuscule, except that the big guy has the big money. So if you notice, if we were to be a large company after 15 years, we should be an incredible insurer. That's the answer. Anything that is happening in 5 years, you don't need to bother about it, because that will be like.
Because it's an annuity business, is it?
Yeah, it's an annual business. I mean, the biggest amount of money in the world, in India, life insurance corporation acts like a rescue machine whenever there is a capital required, or in international markets from Berkshire Hathaway to AIA to everywhere. I mean, if you were to look at large pool of capital that is kept in a bank available to be deployed, it is ultimately insurance. And insurance can extend that, like, in lending. So I'm solving a longer haul, another problem, that if we were to go to so for example, like you just heard that we will bring the deposit first, and now we are thinking that how in 10 years forward we will be able to bring capital to lend, the capital to give, and that is where the insurance plays a role for us. So while
so you're viewing the insurance play as both a profit machine long term, but also as a capital source that you could lend.
Actually, insurance is a profit pool because it lends. Because the revenue model of insurance is ultimately.
And then you would use your distribution to basically build the book.
Yeah. So these are the long curves, like deposit and account opening, KYC solving. So people see them in a literally that, why are you doing recharge? Who built a payment on recharge? I'm like, okay, in a longer arc, you'll see what happens. Why are you doing payment bank are useless? Okay, you'll find out what is the longer arc. Why are you buying insurance? This does not make any money. You'll see in a longer arc. So I look at our business as a 10-year, 20-year horizon business, not like a business that we have to flip the cart.
Yeah, right. Okay, got it. So that's very helpful, right? So before we go to I want to ask you a question on what do you think the government should do, right? Government's done a lot on things like payments.
Yeah, we were talking about that. So
no, but before we go there, tell me, like, if you are a fintech startup, I mean, we have several thousand fintech startups in India, as you know, right?
Yeah.
What are the segments where obviously, the ones that are in digital, that are in lending today are struggling because they can't get access to capital. There are quite a number of them who are in payments that are trying to do various things. We got like dozens of neobanks. You've got now lots of people trying to do brokerages, wealth, insurance, etc. But like, if you were to say there are three spaces where you think you can build large, really valuable, which means often they have to generate some profit, fintech companies in India. Obviously, you're doing something which is everything, right? You build distribution. Now you're pretty much layering everything that you can possibly do on that. And you're chasing, you're going after where the profit pools are. But if you're a fintech startup, maybe you're a fintech entrepreneur just starting up, right? Where should you focus today? What are the top 3 ideas you would be excited about?
I would again chase it with a direction where a large addressable market, and in future the profit pool or a revenue pool, if you will, if your efficiencies can bring profit, that your profit. And I would say in an order of sequencing where the crowd is less, lesser crowd to the larger crowd. And I would put on the top the cross-border, the Forex and cross-border, very less companies, strictly regulated, huge amount of inefficiency, huge amount of cost. I mean, think about $60 billion comes in India with a 4% of the fee. Is that a better business than a $100 billion payment gateway with 0.1% fee? your call. You can choose what you want to do. So that is, I'm going to say that cross-border incoming, outgoing, and I'm sure you understand now the payments have moved from a bank account. Remember, the net banking has moved to the card, has moved to the wallet, has moved to the other tokens, if you will. Similarly, the forex still is lying within a bank account. So this needs to be unleashed over the other products. So huge amount of forex now. You can spend side, receive side, everything I would give it. So huge revenue
That's one
there.
big play. Okay. What are the others? Tell me two other ideas.
Yeah. Second, I'm going to say that there are niche of the markets which have profit pool but are underserved. For example, like let's say a two-wheeler loan, if you will. I'm not going to say that you should get into this, or let's say self-help groups. I mean, in India, giving a loan to the people who have not been served is not a sin. I mean, understand, people like me who come from a family background where my family was not able to have access of 2 lakh rupee loan just because my father was a school teacher and his income was not considered by the bank that he would be able to pay an extra money of the EMI. Clearly told that there is a lead model worth required in this case. So I'm going to say, if you can bring financial services to the people who are not considered wealthy or up to the standard of other banks or financial institutions, lending, insurance, everyone, that is a huge opportunity. And I want to tell you, Rajan, inclusion is an obligation versus inclusion is an opportunity. We saw it in telecom, that telecom customers, like today, the ARPUs are of that level when the customers are everywhere deep down. So if you are able to make money like 100 to 100 rupees a month, and in financial services you can make from 100 million customers, that's not small money. That's a huge money, and that requires a passionate founder out there to drive that. And that is, by the way, inclusion agenda. I do believe inclusion is a very fair business and opportunistic business. And third is a business model that India, like in a couple of years forward, if we were to believe that we will be economy growing at a pace that we are talking 10, 12% because adjusted to the inflation, and then you have to have percentage penetration of lending in the upward of 20% for 12% to come in, you basically are talking about literally in 5 years $1 trillion to be lent, or $2 trillion to be lent out there. So in 3 years you're talking $1 trillion lending. I don't think that our current financial institutions are made to be able to deliver $1 trillion lending. So if you're able to take your 10 billion, $20 billion pie out of it, that will be a huge business. So core plain vanilla lending with a sincerity, just like the banks like HDFC have done it, just like NBFCs like Bajaj have done it, are incredible inspirations. The idea is that they are so huge, not because that the market is they have zero sum the market. They are so huge because they sincerely head down kept working on what was meticulously the correct market. So I'm going to say that there is about $1 trillion of lending in next 3 years and another $1 trillion lending happening in 3 years later. How many billions go through your pipes is your business to bother about. So that's a third business.
Got it. No, that's very good. $1 trillion of lending opportunity in 3 years, and another trillion, right? You only need a very small percentage of that to build a very large company. Hey, last question before we've got a couple of questions I want to take, but last question from me. So, what do you think the government should do more of to really unleash innovation in BFSI, right? I mean, obviously we're here to talk about fintech, but what they really care about is making sure that Indians are well banked and have insurance and are able to build wealth. So what would be the top 2 or 3 asks, Vijay, that you would have? And I'm sure these are things you have already talked about, but what would those be?
The biggest is that we understand this in this country, the distribution of financial services will obligately be technology led, meaning the lesser the human intervention and the cost of human distribution, the better we will be able to distribute. We've done a darn good job of opening a bank account, RBI's, BSBDA, and then different kind of KYCs, including remote video KYC, biometric KYC, paper KYC, all sorts of choices that have come has give the growth of consumer business. But if India's economy has to grow, we have to give loans to SMEs. And SME restrictions and definitions that they can be labeled a priority sector are not in tune with the market requirement. Give you an example, Rajan, here. If you are a restaurant that is trying, let's say you are a small restaurant who's opened the shop with a couple of lakh rupees and as a capital, and you paid some rent, Now, you may not be able to get a loan that will be treated as a priority sector just because you do not have a chartered accountant to give a certificate that the amount of money that you spent on the opening of this capital infrastructure is less than 10 lakh rupees. And just because it is not, a traditional bank will not even come to knock at your door to give you loan, and you will get loan sharks to give you loan. So the idea here is that I believe that the biggest thing that government should do is to help SMEs get loans, and then this journey to digitize. For example, like there is an Aadhaar digitization where if a customer has verified, we trust that the customer is real. Obviously, many other KYC methods also exist where the customer is real. The cost there can be different, and you may or may not choose to do those as a customer. Now, the idea is that there is no such thing for SME. SME, I require a business KYC, then I require owner's KYC. So it is too earnest for us to issue a loan to SME, which is
how interesting.
It is.
So you're come up with a one business KYC, and maybe you combine it with like an account aggregator model, right? Get all their data, it's all in one place, one click.
Yeah, we talked about GSTN, account aggregator, and all those kind of elements, but they apply for a top strata of the customers. We don't talk about 50 million of SMEs in that bucket because number one, GST is not an obligation to a particular size, as you know, because of the restriction and complications. At number two, that you do not even have necessary permissions or the documentations that enable you to get a cheaper loan. Otherwise, you will get a loan shark loan. So if we believe that India's economy has to become that $5 trillion economy, we have to give power of our economic growth to these SMEs. And these SMEs will be receiving this wealth only if somebody as a government and a regulator in tandem are working on bringing digitization as a smooth flow. Just like today, you can literally link a bank account and make a payment. Usually transfer money like from any bank account to any bank account, or do payment on a shop using a QR, even if you don't have a POS machine. That is not possible when I want to give a loan. So I believe that the biggest thing the government should look at in an economic BFSI space is identification and verification and KYC, et cetera, mandates that are given for SMEs. If we are changing that, that's a beginning of. It's like saying doing Series A funding in startups. Once you've done that, then companies will become bigger enough for finding next money.
Yeah, that's a great idea, Vijay. So thank you for that. Okay, let's take one or two. Actually, we've answered some of the questions, but okay, let's take this one. To reach the next billion users, particularly in urban region, is Paytm considering an offline payment approach or feature phone payment options? Are you doing stuff with feature phones or offline?
No. I think somebody should. I'm going to give you a quick background that Paytm started because we did not want to do feature phone business. As a 197, all the business was led by feature phone. So right now, feature phone is not the approach that we are treating because I think the data connection and the cost of now that there is a new OS expected and there is a device that is really low cost. So I don't think that there will be a feature phone led payment revolution required in this country. The real revolution required is a smart device in hand of everyone, which is definitely happening. So like a few years back, I remember Rajan and me were sitting on a stage with a lady from NFN, the lady who was responsible for building broadband by network. And
that's right. Yes.
And Rajan's question was, how many months and years will it take for that 50,000 villages to be connected? Remember that? And today, doesn't want to ask that question because that has got done because somebody took a vow to solve that problem, and this industry solved the problem. So similarly, I'm going to say that I don't think it is a question of that you want to build a feature phone-led business. It is a question of it will be faster than anybody's guess that these all billion will be smart devices.
Got it. Yeah, and then the next question is, how is 2020 reshaping the payment behavior of Paytm users? Are you seeing material changes, Vijay, the consumer behavior? I think it's a really good question.
Deeper number. If a customer was doing X transactions, right now he's doing 2.5 to 3.5X transactions. So comfortably 3X more transactions. So the customers who are used to of digital are getting deeper engaged. And obviously, like we started this conversation, newer customers attempting to come on the platform is what we all are chasing. But like, let me assure you, the number of customers who are on the platform and are doing more number of transactions is phenomenally increased. So active customer doing more transactions have gone very, very high. Annually, our average number would be now average. I mean, in a week level, I can say a couple of. On a week level, 2 transactions now. I mean, more than.
Okay, so an active Paytm user is doing 2 transactions a week.
Yeah,
on average. On average. Okay, got it. All right. The next question is: you mentioned about service being a differentiator in growing customer base, despite zero cashbacks. Can you explain what these are? Also, what do you do differently that customer chooses Paytm over PhonePe or Google Pay? So tell us more about what do you mean by service?
The biggest one, because you are putting a reference of other apps here, would be that how many funding sources a customer has. If your all funding sources from a bank account or a card or a wallet are combined on a single app and it works across everything, you probably will have this product chosen over other products. So we don't have to spend money to acquire a customer or retain a customer, because the customer's money is locked in on our platform, or he has all the funding sources that he's chosen. Now I'm going to give you another example here, that we've gone to enterprises, for example, like our bank account opening with enterprises. So enterprises give money in their food wallet or a gift wallet. So that money also is shown in the Paytm app, and that can work out. So starting from there, which is customers, money and funding source availability aggregation. Second thing is the number of places that you can pay, the use cases. Typically, because we are looking at a comparison over my absolute answer, so I'm going to give an example here, that other apps are typically purely a BBPS-led or a use case in an offline or P2P, these three use cases. But we've gone ahead and built many more use cases. So that's how I treat.
Got it. Cool. And then there's a question for me, addressed to me about WhatsApp payments. I think Bobby, my dear friend, runs WhatsApp Pay. He was on a panel yesterday at GGF. So please ask Bobby. I have no idea what WhatsApp Pay's plans are. So with that, Vijay, I think we have 2 minutes left. I'd love to. Yeah, go ahead.
A question for you.
Yeah, you can ask me a question.
Okay.
As long as WhatsApp Pay, I have no idea what WhatsApp Pay's plans are.
You saw these Indian startups since tens of years in this country, and you're seeing huge amount of money coming in this country, albeit to a few set of companies, not everyone else. How do you see the funding environment shaping up post 2020? 2020 includes COVID, 2020 includes Reliance huge $20 billion funding and whatnot. How do you see funding environment in this country for startups?
Yeah, so I think before we go to the funding environment, Vijay, my view is that our view rather is that there are going to be some material changes in our ecosystem, right? And in fact, you started with this. India has over 40,000 startups. Only about 10% have raised venture capital funding, right? And of the startups that have raised venture capital funding, 90% are deeply unprofitable. Right, we know that, right? And of the ones that actually haven't raised, only 40% are profitable. So first thing is obviously, as we know, a lot of startups have already closed shop. Many more are going to close shop. But in the last 4 months, what we've seen, Vijay, is every Indian startup has materially improved their underlying unit economics. So in fact, we've seen many companies now actually get to profitability. So, it shows the amazing ingenuity of Indian founders, right? Where you go from being deeply unprofitable to actually being profitable in 4 months. I mean, what the hell changed? Well, what changed was demand got soft. Demand went to zero for a couple of months. You got worried that, you may not be able to do funding. You got worried that maybe consumer behavior will change. And also you had so much, excess in the company that you could restructure costs, right? So that's the first thing. Second thing, what we've seen in 4 months is products are getting much better, right? Distribution is getting much more efficient. I mean, it's amazing. Right? One of the things you shared is Paytm has a commerce business that's profitable because you're zero CAC. It doesn't matter what your take rate is, right? If you're zero CAC and you're profitable, right? So I think products are getting much better. Distribution is getting much smarter. So as a result, look, what we think is going to happen is the quality of the ecosystem is going to improve dramatically. Yeah. And the great thing about high quality companies, Vijay, is high quality companies don't need to raise insane amounts of capital. Google built $1 trillion company on $25 million of Series A round, right? Nitin, I was listening to Nitin from Zerodha's. Nitin built the largest, brokerage platform in India with like no external funding, right? So
I give it to Nitin in between, because even though for 7 years I was without any fundraising done, Nitin has built literally 1,000 crore revenue and profit company. I mean, hats off to him. He's the truest rock star of this country.
No, but my point. Yeah. So my point, Vijay, is I think by end of 2021, I think the underlying health of the Indian startup ecosystem is going to be 10x better than what it is today, right? For all these things, and as a result, I think Indian startups will generally require less capital, but whatever capital that they need, they'll be able to get. Because keep in mind, there's $20 trillion globally that is of negative interest rates right now, right? The world is not short. The world is awash with capital. It's just looking for interesting investments to make. So I think the next year, is probably going to be slower, right? Because, lots of uncertainty. But I think by 2022, India is going to see much more capital than we've ever seen, because we're actually going to have very high quality companies, right? I mean, think about Paytm. You've said this already, right? By end of 2021, you're going to be profitable. I mean, my gosh, let's say you are already worth, I don't know, 18 billion. By the way, those of you that aren't in India, right? Last round valuation of Paytm is 18 billion. Imagine what people are going to pay for this company, value the company at. If you're generating a huge amounts of profits, oh my gosh, right? I mean, you can't even imagine. So I hope that answers the question.
Actually, it does. The next question, which because we have a minute.
I think we're out of time.
We just have the last 1 minute, but we'll have to close it in a minute for sure.
I would say that Rajan being the champion of what it is the best way that what he's finished, that 2021 will be the year of India startups getting better, stronger, smarter. So to that, cheers.
Thank you so much, Vijay. And again, thanks so much for joining us. Thanks, everyone. Thank you, Vijay.
Thank you so much.